Andrew Holland, CEO of Avendus Capital, joining us. Good morning, Andrew. Thank you for giving us time here on News 9. And I mean, I want to begin with asking about this recovery, this sharp 600-point recovery that we have seen in the last 4 sessions. Most of the sectors also, barring a couple, I think, have participated in this pullback. What are you making of this? And and again, the big question, can we sustain and, perhaps move on further from here on?
So one of the things, if you remember when we talked last time, was 2 things, or 3 things actually. One, that the confidence had come back to the market after that kind of March fall, and particularly to kind of small and mid caps, which I think was, extends the breadth of the market, which is always very important. And 2, we said that we'd look at what the banking sector results and the IT sector results. And where we're seeing a bottoming out of the kind of problems there. I still think the jury's still out for the IT sector. I still think it's a game of when interest rates will fall to give that extra tailwind. But the results weren't, we're in line. For some, it's a little bit worse than expected. And on the banking, with Axis Bank yesterday showing that NIMs can improve, and other banks, maybe it was just a problem of last quarter. And maybe we're getting through it now. So, I think the banking sector is the one which I think could, move the market higher if the results of Axis Bank are anything to go by for the other banks going forward. So, a little bit more positive. And of course, we've got the elections going on, and I'm sure, we'll get some interesting anecdotes from that in terms of speculation on how things are going, and that might help with an extra kind of push for the markets.
All right, and what do you think is the biggest risk for our markets? Because there are geopolitical factors at play still, and the bond yields, they are still elevated at 4.6%. And as you also pointed out, the commentary from Fed, I mean, that has turned hawkish. So apart from the global headwinds, are there any domestic factors that could perhaps halt this rally?
No, I think it's more global factors, as you pointed out. Geopolitical is still, humming away in the Middle East, and we're all keeping an eye on it. But, I think, once the initial shock of something happening, I think the next time around it becomes less of a shock and less of a shock, and therefore the market absorbs it. I think that the markets, could have taken in its stride the kind of whole pivot we've all had to do on interest rates falling in the US. If the narrative now is that there could be possible increases, so that's how it's changed. But the markets held up, remarkably well in the US, and I think it's going to be driven by tech results there. And again, there's been so far just a little bit of a mixed bag in terms of the results. So, but it's a heavy week for the results in the US. So I think those are the drivers. It's more earnings related domestically for us. Unless any geopolitical event happens in the very short term.
Good morning, sir. Keeping to bonds, while bond yields are high in the US, India seems to stand out as cheap bonds as the JP Morgan index date of inclusion nears. Do you see more capital being invested in Indian bonds in the near term?
Yeah, I do, because I think there's the stability of the government that hopefully will continue, and of course the RBI has done a great job in terms of not just managing the currency and the flows that come into India, but also have been very good in terms of fighting inflation without really hampering growth. And I think that's what the market's like. So that stability, I think, will come through, unless it's some geopolitical event where everyone moves to safe havens like the US dollar and bonds. Then I see these flows coming through quite heavily over the next kind of 6 to 9 months, and I think that will help the RBI in some kind of thinking about reducing rates as well.
Amit, I mean, of course, even Andrew was talking about RBI being very proactive and doing wonderful things. I mean, as far as regulating the financial space is concerned, and we saw that just 6 months back they started It started with a crackdown on unsecured lending. Under the purview then fell a lot of these NBFCs. But yesterday, Kotak Mahindra Bank, I mean, that was a big one, right?
Yeah, the bank has been asked to has been barred to onboard new customers through its mobile banking channels. They will, however, continue to provide services to the existing customers. Now, it must be noted, back in December 2020, RBI had stopped HDFC Bank from launching its upcoming digital generated business activities. The ban was lifted completely by March 2022. So it was 2 years. Sir, will it take this long even for Kotak Mahindra Bank? The stock is down almost 10% today. For RBI to basically, for Kotak to correct what the RBI has asked of, and will it take this long for Kotak also to basically correct what the RBI has raised objections on?
No, you make a great point, and I think that's what the market's worrying about, is how long it will take. I mean, it's impossible to answer that question because only the RBI will know the answer to it, and what they're asking Kotak Bank to kind of fix going forward. So, I think the market's taking a view that it's going to take longer, and therefore, whilst there's been some earnings downgrades, probably the shares is reflecting not just the earnings downgrades, but the fact that it could last longer than the market would hope. So again, just I don't think there's anything untoward going forward, but the market doesn't like uncertainty, and this is uncertainty, and therefore you don't know timelines.
All right, and also, do you expect this issue to cascade, for other banks as well? Could other large private banks also fall in the scanner of RBI?
Yeah, I mean, obviously, the RBI is looking across all banks in terms of what services they're offering and where they are in terms of technology. So difficult to say, who's next, if there is a next. But I would have thought, if anything, all the banks would be looking at their, policies, procedures, their digital offerings, and so forth, and making sure that whatever compliance they need to be, whatever audits that they have, would be looked upon very, very carefully and improved upon if need be, in terms of their services. So I think that's what will happen within the sector. So hopefully, it's kind of something that will be a catalyst for all banks to kind of look and see what's happened, and if they need to get their act together, then do so.
All right. And moving on, we'll focus on the telecom sector now, because that is also buzzing off late. Apart from the strong interest that we saw in Vodafone Idea's FPO, Bharti Airtel has also been in the spotlight. So the stock is at record high levels. It has surged nearly 45% in just the last 6 months alone. Bharti Hexacom, which is its group company, after that stellar debut of where it listed with a premium of over 30%, has surged another 20%. Jio in the unlisted space is doing well. Also, there are speculations of tariff hike possibly down the road, which will again further boost the ARPU, which is do you think it's good time to enter this space, the telecom sector, sir?
I think all the positives that you just highlighted has been playing out in the share prices of most companies. I think with the tariff hike in particular. But I think, I think what the market's liking to some extent is that there is a third player, and it is government backed, obviously. So that gives the fact that there could be some movement in tariffs going forward, not just the one kind of increase after the elections, but going ahead as well. We might see more and more kind of increases, as services kind of improve, move towards 5G. It's all got to be paid for at some point, right? So I think that's that's what the market's liking, and it's been a long time, right? So we've been excited about the telecom market. It's been more about the race to the bottom in terms of pricing and market share. I think that's started to stabilize. And if I notice that, one thing from the Reliance results is that, the cash flow was slightly negative for Jio. So again, it would help if there's a tariff increase. So maybe that's what we'll see. I'm not saying we're going to a kind of cement type cartel, but it could well be, could well be a positive for the sector going ahead. So an unloved sector for a long time, which could now actually kind of be a catalyst for some strong price movements.
And also want to get your view on Vodafone Idea, because the FPO received very strong QIB support. I mean, QIB is the qualified institutional buyer, subscribed 20 times to the the quota reserved for them. Why are we seeing some such strong institutional backing for the Vodafone FPO? Is it the FPO price was that cheap, or is there more than we know, sir?
Well, there's more than we know, then we'll get to know in that respect. But I think it's all the positives which you just talked about for the sector, and obviously that the government will be supportive, not just by their holding and in debt and shareholding in Vodafone, but in terms of the overall kind of sector, the sector and increase in tariffs and so forth. So I think that's what the market is like. Obviously, you see the numbers. I mean, the numbers are huge in terms of, what people are using their phones for these days. So I think that's the whole potential of Digital India played through the mobile services is something that the market likes. It's just been bogged down by the fact that there's been a price war.
All right, and before we let you go, also wanted to get your view on the management guidance coming from the IT companies. I mean, apart from TCS, they are essentially Infosys, Wipro, even Persistent. They are essentially expecting flat to marginal growth. I mean, this year as well. Looks like FY25 is going to be another difficult quarter for our IT companies. So, is it?
Yeah, as I said, they're not out of the woods. The commentary says as such. But it's not as you're kind of getting towards that bottom, but you need a kind of a catalyst. I think that catalyst has to be lower interest rates, and for the financial sectors globally to start picking up again, and that's where you'll start to see the growth start to pick up. So whether we're there now or one more quarter, it's a sector you don't need to kind of rush into. I'd probably be looking more at the banking sector compared to the IT sector at the moment as a catalyst to get some outperformance.
All right, the IT sector needs a catalyst, and that could be monetary easing from the US. But as far as it looks now, that could be much later down the road, potentially not even this year. But sir, great insights from you as always. Thank you for giving us time here on News 9.
Thank you for the opportunity.